The Trump administration is stepping up its efforts to target China over economic espionage, simultaneously announcing a new initiative to combat trade theft and charges involving alleged crimes against an Idaho semiconductor company. The Department of Justice unsealed an indictment Thursday alleging a state-backed Chinese firm, a Taiwanese company, and 3 Taiwanese individuals committed conspiracy to steal trade secrets from Micron, which makes memory chips. Chinese economic espionage against the United States has been increasing, and it has been increasing rapidly. We are here today to say, enough is enough. We are not going to take it anymore, said Attorney General Jeff Sessions at a press conference. It came as U.S. President Donald Trump held his first phone conversation in months with Chinese leader Xi Jinping, amid rising economic and political tensions between the two major powers. The two leaders discussed trade tensions as well as the ongoing efforts to smooth relations with North Korea, in a chat described by Trump as long and very good. Those discussions are moving along nicely with meetings being scheduled at the G20 in Argentina, the U.S. president said on his Twitter, confirming a likely meeting between the two in Buenos Aires in November. But the conversation is unlikely to halt U.S. efforts to crack down on alleged theft of technology by Beijing, with 3 broad indictments issued against Chinese intelligence agents by the Department of Justice in October alone. Trade secrets stolen. The 3 individuals named in the indictment worked for Micron's Taiwanese subsidiary. They later went to work for United Microelectronics Corporation in Taiwan, where they are alleged to have orchestrated stealing trade secrets from Micron. The Taiwanese company partnered with the Chinese company Fujian Jinhua Integrated Circuit Company and shared technology, according to the Justice Department. An email to United Microelectronics wasn't immediately returned. Contact information for Fujian Jinhua could not be found and its website appeared to be down on Thursday afternoon. A Micron spokesman said the company welcomed the Justice Department's decision to prosecute. Micron has invested billions of dollars over decades to develop its intellectual property. The actions announced today reinforce that criminal misappropriation will be appropriately addressed, he said. The United States had already delivered a sharp blow to Fujian Jinhua on Monday, when the Commerce Department said it would restrict American companies from selling software and technology to the Chinese-backed firm. The ban could bring the chip maker, which relies on foreign tech, to its knees. Also this week, the Justice Department charged 2 Chinese intelligence officers with trying to steal the details for a type of jet engine technology from U.S.-based companies. These actions are adding to tensions between Beijing and Washington over trade. The two economic powers have slapped tariffs on billions of dollars of imports this year, and President Donald Trump has threatened to impose duties on the remaining Chinese imports if Beijing does not change its trade policies. In recent months, the chilling of relations has even expanded from trade into a broader and political and diplomatic confrontation, with U.S. Vice President Mike Pence accusing China of trying to interfere in the U.S. midterm elections. Larry Kudlow, director of the President's National Economic Council, also showed some optimism Thursday over talks with China on trade. "There may be a little thaw going on here," he said outside the White House. But Kudlow also dinged Beijing, crowing that the U.S. is doing better than the rival superpower. "I think their economy is sloppy," Kudlow said. "I'm just saying, from our view, we're booming. China's not." Its move to target a state-owned Chinese chipmaker over national security concerns goes to the heart of the clash between the two economic superpowers over technology and trade. It also exposes China's lack of successful homegrown semiconductor companies as one of the biggest vulnerabilities in the country's bid to become a global tech powerhouse. The U.S. Commerce Department on Monday announced that it is restricting American companies from selling crucial software and technology to Fujian Jinhua Integrated Circuit Company, saying it poses a significant risk of becoming involved in activities that are contrary to the national security interests of the United States. The ban could bring the chip maker, which relies on foreign tech, to its knees. A similar U.S. move against Chinese telecommunications equipment maker ZTE, Ztecof, in April brought its factories to a standstill for months. The U.S. government didn't provide details about what potential activities it's worried about. But Fujian Jinhua, which is owned by the provincial government of Fujian in southeastern China, has been accused of stealing trade secrets by U.S. chipmaker Micron Technology, MU. Fujian Jinhua, which has filed a countersuit against Micron in China, didn't respond to a request for comment Tuesday. The Trump administration has said China's efforts to get hold of American technology are an existential threat to the future of the U.S. economy. It has made the issue a central part of its trade fight with Beijing, imposing tariffs on $250 billion of Chinese goods and threatening more unless Beijing changes its industrial policies. The Chinese government sees the situation very differently, viewing the need to develop higher-tech manufacturing industries as vital to its economic development. Despite widespread complaints from companies, it denies it has sought to obtain U.S. intellectual property by unfair means. Trade war turmoil. Like the ZTE ban, the U.S. move against Xinhua is likely to add to the tensions between Washington and Beijing. China opposes the United States' behavior of abusing the concept of national security and export control measures, as well as the United States' unilateral sanctions and its interference in normal international trade cooperation between companies, the Chinese Commerce Ministry said in a statement late Tuesday. It urged the U.S. government to stop the wrong measures immediately and protect the legitimate rights of the companies. Analysts see a little chance of either side backing down anytime soon. Trade talks between the two sides have failed to make headway this year. Bloomberg News alarmed investors Monday with a report that the U.S. government is set to move ahead with even more tariffs if a meeting expected to take place next month between Chinese President Xi Jinping and U.S. President Donald Trump doesn't go well. U.S. stocks slumped, and the yuan fell to its lowest level in a decade in Asia trading. Trump suggested Monday on Fox News that he's not expecting quick progress. "I'd like to make a deal right now," he said. "I just say they're not ready." China's reliance on foreign tech. Xi has made building China's semiconductor industry a key priority, even comparing a computer chip to the human heart. "No matter how big a person is, he or she can never be strong without a sound and strong heart," he said in April during a visit to a semiconductor factory in central China. That heart is currently powered by foreign tech. China buys more computer chips than any other country, consuming about $140 billion, or 38%, of the world's semiconductors, according to research firm IC Insights. Despite its voracious appetite, China produced just $18.5 billion, or about 13% of the world's chips. Beijing is aggressively trying to close that gap, but developing a competitive chip industry is expensive, politically sensitive and takes time. The government has invested billions in homegrown chip makers like Xinhua, Tsinghua Unigroup and Initron Memory to help them develop their own intellectual property. Even e-commerce company Alibaba, BABA, is getting in on the game, announcing last month that it will set up a company focused on building artificial intelligence chips for cloud computing, internet-connected devices and other sectors. Chinese companies have also tried to get their hands on technology by bidding for foreign chip businesses. But several attempts to buy stakes in American firms failed after U.S. authorities objected to the deals on national security grounds. Despite the hurdles, China is impatient to grow the industry. Beijing's Made in China 2025 plan, one of the industrial policies singled out by the Trump administration as a concern, includes the ambitious goal of achieving self-sufficiency in high-tech industries, including semiconductors, by 2025. The trade war is complicating that effort. China needs foreign tech to keep developing its homegrown chip industry, according to SEMI, an international association for companies that supply the electronics industry. "We need to face up to the fact that there is still a certain gap between the domestic semiconductor industry and that of the international advanced level," the group's head of China, Lung Chu, told reporters in Shanghai last month. Therefore, international cooperation is the key to industry growth.